Welcome to XM.com. I'm Cristina Marujos, and you're watching today's Daily Market Comment by Raf Boyajian. The Federal Reserve took its biggest step yet towards scaling back its pandemic stimulus on Wednesday. As expected, the Fed kept its policy unchanged, but signaled that a moderation in the pace of asset purchases may soon be warranted. A November taper announcement now looks almost certain. But markets took the hawkish signals in their stride, with shares on Wall Street holding on to their session gains after the announcement. However, what was more striking is that markets barely reacted to the updated dot plot chart. Policymakers are now penciling in 3 rate hikes for 2023, which is slightly more hawkish than expected, but were split about the timing for the first rate hike. The notably hawkish tilt boosted the greenback, pushing the dollar index to 1-month highs as the short end of the U.S. yield curve steepened following the meeting. However, the dollar is paring those gains today as long-term yields fail to catch up. The yield on 10-year Treasury notes slid on Wednesday and is up only modestly today. The S&P 500 closed up almost 1% yesterday, ending a 4-day losing streak, and U.S. futures were pointing to solid gains for today as well. In broader equity markets, the mood was mostly upbeat as fears about a global fallout from Evergrande's debt crisis eased further on Thursday. The Hang Seng Index rebounded by 1.2% as Evergrande shares surged after the company said it reached a settlement with a major domestic bondholder on the interest payment that's due today. However, investors remain nervous about Evergrande's cash flow problems as it's still unclear whether it will be able to meet the payment for its dollar-denominated bonds. In the FX sphere, the Canadian dollar was a surprise winner from the Fed meeting, jumping more than 1% over the last 24 hours. Sterling was also on a steadier footing ahead of the Bank of England policy decision at 11 o'clock GMT. There is a risk the Bank of England will cut the target of its asset purchases and pave the way for a rate hike in the first half of 2022. But investors aren't as optimistic about the outlook, given that the UK is facing a much more severe energy and supply shortages crisis than other countries. This was the Daily Market Comment. Thank you for watching at XM.com.